Pantheon AI presents Economy Lost 911K, More Jobs Than Reported. ASML's AI Investment Self-Driving Revolution. Welcome to the PAI Morning Briefing. I'm John, here with my co-host Sarah, and today is September 9th, 2025. Good morning, everyone.
Good morning, John. I hope everyone's ready to dive into the latest financial market insights. We've got a lot to break down today, from major index moves to some really fascinating global trends.
We certainly do. We'll try to sprinkle in some analysis, maybe a little humor, and plenty of questions to think about. So let's just jump right into it. Where are we starting?
Let's kick off with a quick market overview. As you're waking up, the S&P 500 is sitting around 6490.4 after dipping about 0.2% overnight.
Right, and while that seems like a tiny pullback, we know even the smallest nudge can create some interesting plays for traders and long-term investors alike. Now, meanwhile, the Dow is actually showing a slight uptick, trading at about 45,559.2. That's up just over 0.025%.
So a bit of stability there, nudging into optimism, however modest. On the tech-heavy side, though, Nasdaq has been sliding a bit. It's at about 21,763.3, which is down roughly 0.43%.
And for those tracking the smaller companies, the Russell 2000 is down even more, nearly 0.83% at about 2,373.6. So quite a bit of downward pressure there.
Exactly. And quickly checking in on crypto. Bitcoin is trading around 111,575, having lost about 0.43%. Its counterpart, Ethereum, is at roughly 4301, down about 0.13%. It's really a mixed bag across the board today, isn't it?
It really is, which I think leads us perfectly into a deeper dive, because what we're seeing this morning is this interesting mix of caution and opportunity. The slight dips in the S&P and Nasdaq are a good reminder that the market is still very sensitive to economic data.
For sure, and there has been a lot of chatter around labor market softness, which is brewing that cautious sentiment. A series of recent reports, which have been all over the headlines, indicate our economy created, get this, 911,000 fewer jobs between 2024 and 2025 than we originally thought.
Wow, 911,000. That's not just another statistic. That's a massive revision. And many economists are saying this is more ammunition for the Federal Reserve as it considers what to do with interest rates.
It's pretty ironic, isn't it? In an era where we expect data to be so precise, a revision of nearly 1 million jobs just makes you question the whole economic narrative we've been following. The labor market, which we all assumed was on this solid upward path, is now showing some real softness.
Right, and that could translate into a more accommodative policy from the Fed. In fact, a notable report from the Bureau of Labor Statistics digs into this even further. Their preliminary annual jobs revision was down by that 911,000 figure, which was way off the consensus estimate of 682,000 fewer jobs.
And that difference, John, is apparently the largest on record. It suggests a huge recalibration of our employment data might be underway. So what does this all really mean for us?
Well, in a financial world where every decimal point matters, revisions like this can imply the Fed might need to cut rates more aggressively if the economy isn't as strong as we thought. The big question is, will they act quickly, or are we in for a slow, gradual rebalancing? It's that tension that keeps things so dynamic.
That's a great point. And while we're on the topic of market-moving news, there's another really interesting story about tech and AI investments. You've probably heard the buzz about ASML, the company with those incredible multi-million-dollar lithography machines for semiconductors.
Oh yeah, the linchpin of the whole chip industry. What are they up to?
They just announced they're buying a significant stake in an emerging AI chatbot creator. This move really highlights that growing synergy between hardware and AI software. It's not just diversifying their portfolio. It feels like a strategic move to position themselves in a market that could redefine global tech.
That's fascinating. And honestly, who wouldn't want to invest in a future where machines talk back to you? It might even save you from some awkward small talk at networking events.
Haha, exactly. Now let's switch gears to what might be one of the most exciting developments on the horizon: self-driving vehicles. There are new reports lighting up the industry about how self-driving trucks and tractors are quickly becoming more than just a futuristic concept.
This is a big one. These advancements could totally revolutionize transportation and logistics. Of course, the promise has always been laced with caution. Regulatory hurdles, technical challenges. But the reports suggest the companies leading this charge could be excellent portfolio diversifiers.
Imagine a future where your portfolio includes investments in vehicles that drive themselves, Talk about literally giving your investments a mind of their own.
I love that. So when we look at all these big stories, the jobs data, central bank strategy, the investments in AI and autonomous driving, the underlying trend is one of significant transformation. Each piece contributes to this broader narrative of volatility and innovation.
Absolutely. It might be a good time to quickly run through the top stories making the rounds just to connect all these dots for our listeners.
Good idea. So first, we have that repeated headline, the economy creating 911,000 fewer jobs than we thought. It's a huge reminder of the labor market's dynamic nature.
Second, as you mentioned, is that BLS preliminary jobs revision being the largest adjustment on record. It's a real wake-up call for how we interpret employment data.
Third is ASML's strategic move into AI chatbots, which is stirring conversations about that hardware-software integration.
Fourth, the news on self-driving trucks and tractors, signaling a quantum leap for logistics and a new opportunity for investors.
Fifth, there's this undercurrent of discussion about global supply chain issues. Analysts believe trade tensions and logistical hurdles will continue to be a factor well into next year.
Sixth is the evolving energy market. Prices have been volatile due to shifting demand and geopolitics, making the sector a focal point for both risk hedging and potential rebounds.
Seventh, we have to watch the financial services sector. With the Fed possibly cutting rates, banks are on high alert, and we could see lending practices change.
Eighth is the growing theme of sustainable investing, or ESG. It's not just a trend anymore. It's becoming a fundamental part of how capital is allocated.
Ninth, a couple of reports have touched on potential geopolitical shifts, especially in Asia and Europe, which could impact any sector tied to global supply chains.
10th, there's more chatter about emerging market equities. With domestic headwinds, some investors are looking abroad for diversification and growth.
11th, blockchain integration continues to gain momentum, moving beyond just crypto into supply chain management and other industries.
And finally, 12th is the underlying trend of data transparency. More rigorous audits and real-time data are leveling the playing field for investors. A really important theme.
That's a fantastic summary, Sarah. Let's dive into a few of those sectors. In tech, the moves by ASML really represent a seismic shift. So with AI becoming so central, are we witnessing a new golden age in technology? Or is it too early to tell if these bets will pay off?
That's the million-dollar question, isn't it? I think it has the asterisk potential to be a golden age, but we're in the investment and building phase. The real payoff will be seen in how broadly these AI tools get adopted and integrated. It's definitely one to watch closely.
Good point. Shifting to energy, you mentioned the volatility. It really is a delicate balancing act for investors right now.
It is. Some investors joke that the energy sector is like an unpredictable friend. You never know if they're bringing fireworks to the party or just a few sparklers. The debate between traditional fossil fuels and the growing tide of renewables is really heating up.
I like that analogy. And the financial services industry is in a similarly interesting spot. With the Fed potentially cutting rates, banks and lenders are recalibrating their strategies. It's like adjusting your umbrella when the forecast changes.
Totally. Could this be the catalyst for a new wave of financial innovation? It's possible. And of course, all of this has global implications. The revised labor data here could lead to synchronized policy shifts in Europe and Asia.
Which means global investors might need a more diversified, internationally balanced portfolio to hedge those domestic risks. Many veteran analysts are suggesting this softer economic data is a clear precursor for more accommodative monetary policy, a sort of cautious optimism.
But they also caution that those policy shifts have to be measured carefully to avoid stoking more volatility. It's that classic tightrope walk, which, let's be honest, sometimes feels like we're all walking it without a net.
So true. And in tech, while experts are rallying behind AI, they're also asking serious questions about self-driving vehicles. For instance, how quickly can they really overcome hurdles like safety, cybersecurity, and regulation?
It's a huge question. The technology might be advancing fast, but the real world has a lot of catching up to do. So, John, given all this, what are the key takeaways for today?
I think there are three. First, while the indices show minor moves, the underlying forces are setting the stage for bigger long-term shifts. Second, the jobs data reevaluation is a pivotal indicator that central bank policy could change sooner than we thought.
And third, Technological advancements in AI and autonomous vehicles signal that industries are evolving at a breakneck pace, creating both huge challenges and massive opportunities.
Perfect. And, investors sometimes joke that the market is like a roller coaster. If you're not strapped in tight, you might find yourself screaming. The trick is not to lose sight of the broader journey.
A great way to put it. So, as we navigate these highs and lows, we want to leave our listeners with a few questions. Are you diversified enough for these shifts? Are you prepared to pivot your strategy? And how do you balance the desire for quick gains with long-term resilience?
Excellent questions. And to all our listeners, your own questions and insights are always welcome. I encourage you to reach out to our AI co-pilot at Pantheon AI for deeper analysis on any of these stories. Our mission is to be your trusted information co-pilot.
So to wrap up, we've seen how minor index shifts, major data recalibrations, and bold tech investments are all interlocking to form a mosaic of market transformation. It's these interconnections that really dictate the pace of change.
Thank you for joining us on this tour through today's market landscape. We hope you found the insights valuable and the conversation engaging. Be sure to tune in tomorrow for our next briefing.
Until then, keep questioning and stay curious. Have a fantastic day ahead, everyone.
And thanks for being part of the Pantheon AI community, your trusted information co-pilot in the vast and ever-changing world of finance.
Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.